everything they're finding this things too.
Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Wednesday, and the market did show some strength today. We were up on the NASDAQ as well as the S&P 500, and but unfortunately the Dow was down a little bit. Interesting day in that we're seeing some strength in the internet content area. One of the stocks that moved very nicely today was Google, believe it or not, and I was able to stock up on that a little bit. I was able to buy some positions there, which did well. Also, a company called TTD is doing well as well. But basically, let's get to the topic of the day, and that is an interesting offering by Apple. It looks as if Apple is going to offer through Goldman Sachs a credit card, and this is the Apple credit card. And interestingly enough, it is going to pay on their savings account, and this is really quite amazing. They're going to pay 4.15%, which is, believe me, far better than I'm getting on my savings accounts. That's for sure. I'm pretty excited about it. I mean, basically what's happened is in 4 days with this offering, they have already, they're already up to about over $1 billion in assets. So pretty amazing. And the way this is going to work, it's going to kind of be interesting. It's going to go through, as I say, it's going through Goldman Sachs. They're going to be the ones that are going to administer this credit card, but it's going to be part of the Apple Wallet feature on the iPhone and and other Apple products. So it's very interesting when you consider in the real estate business, the cap rate on most new residential real estate investments is only about 4.5%. So the fact that Apple is willing to pay 4.15% on savings deposits, which is an annual fee, is pretty significant, and something that I'm actually looking at this, believe it or not, because it's so attractive that that might be something that I may even consider myself. So currently don't have it, but it's very interesting, and just kind of be on the lookout for that. I want to also indicate again, we are still in a uptrend under pressure in the market. That means that the market is struggling. So it's a good time to be about 50% in cash or potentially short the market. I've closed all my shorts, but I am pretty much more than 80% in cash right now. I'm just sitting there waiting for an opportunity. So it's something that you might want to look at in terms of that, because it does look as if we're still in for some heavy sledding. Now, by the way, we did see a little bit of gold did pull back a little bit, but it still remains one of the strongest sectors. The strongest sectors currently are this is definitely one of the strongest sectors in the market right now, and that is the gold. The gold miners, and I've been kind of harping on that. The gold was down a little bit today, but the sector remains very, very strong. So it's definitely something that is worth looking into in terms of a place to possibly look for potential values here. Now I'm currently unfortunately, and here I am saying this, I was stopped out of Triple Flag precious metals. That's a stock that I had done pretty well in, but it turned against me, and I'm out of it because, of course, again, I am pretty much very strict about my stop losses here. I typically try to be only on the downside. I'm looking at more than about 4.5%. So I'm pretty strict in terms of that. In terms of that going there. But let's take a look at Apple, see how they did based on the this interesting news about their about their report, and definitely, has been benefiting the stock, Apple stock, which is essentially a proxy for the, which is essentially a proxy for the Nasdaq. It was up today. It came down. It tested at the 21-day line. This is the reason I always talk about this 21-day line, why it's such a good place to buy, because as you can see with Apple stock here, it's been pulling back. It hits the 21-day line, and then it moves up and pulls back and moves up and pulls back. But you can't argue with you can't argue with success. Definitely speaking, this is the kind of thing that you got to look at. So Apple has raised over $1 billion, I believe. I want to take a look at this because I can't even hardly believe how much it is. Yep, there we go. So let's puff up that article here. They've basically brought in, they say 990 million in 4 days. This is absolutely amazing. And I guess they're up to $1 billion that they've taken in the last 4 days with this savings account, which is a tremendous amount when you consider it. But it's a high yield savings account, and it is available out there. By the way, if you're interested in it, I'm currently not in it, but just something that I want to pass along. I want to pass along to everybody here. Let me give you a URL for that so you can see it. But basically, what you do is you apply for the Apple Card. And again, I'm not receiving anything from Apple, but what you do is you apply for the Apple Card, and then basically it's savings account, and 4.15%. So that's pretty tremendous. That's a pretty tremendous amount. Now, also, I think PayPal has something like this, but I'm not exactly sure. I'm not as sure on their program, but very interesting when it comes to that. All right, well, let's take a look, see what the indexes did here today. Basically, what's going on is that we've got the three major indexes. The Nasdaq was up about 1.04%. The S&P 500 up about 0.45%, but the Dow Jones was off overall, and that was down not very much, about 0.09%. So not that much, but still, Nasdaq and S&P up, and the Dow Jones down. Now, the markets were led by the Nasdaq today, and a lot of it was in this internet content group. I saw some movement in terms of Google. That's why I started, buying a position there. I did have some yesterday. I did sell my triple flag precious metals. I got out of that one. I kind of took a little bit of a haircut on it. I was kind of surprised on earnings. They dropped a little bit. Of course, the price of precious metals dropped as well. I'm really only holding these 4 stocks. It's kind of amazing. I'm mostly in cash, but right now I have TTD, and that's a company called The Trade Desk, and they're kind of like Google in that they provide online advertising to the web. Very interesting company based in Los Angeles. Also, of course, GOOG, that's Alphabet. That's basically Google Class C. Now, there's two classes with Apple stock: the A shares and the C shares, and they're pretty much similar in the same. The C shares typically are the larger of the two in terms of the amount of volume and size, but just barely. And I do have a position in Intel. It was kind of disappointing today. It's down about 13 cents. And then, of course, I have AEM, which is a Canadian gold miner. So I'm very, very lightly invested right now. But I definitely am looking at the internet content area, which seems to be making the right moves right now. So we shall see what happens in the near future. So let's take a look at some questions. Thank you so much for holding on. And Lisa is the first one up. Thank you so much, Lisa. Always great. Thanks for tuning into the show. Let's look at Shockwave and Nugget. Shockwave, of course, is a Israeli-based medical company that does very interesting thing when it comes to it comes to this. It basically what this process is that it allows basically uses shock waves to unlodge plaques and various other things, and so it's quite interesting in terms of how it operates. So let's look at shockwave SWAV, and it did well today as well. So let's take a quick gander at that. SWAV. There we go, Shockwave Medical. Bring that up here. There we go. So with Shockwave, we have this formation here. We do have a buy point right at 300. It came up to 289 today, and then it pulled back a little bit. As you can see, there's a little bit of a handle here. This is a cup of handle formation. We do have a relative strength indicator of 96, which puts us in the top 4% of stocks right now. So looking very, very good. Let's take a look at the 60-minute chart and see how it's traded. It's sort of, it's got a resistance, and that resistance is right here at 300, putting that on the chart here. So the resistance on Shockwave Medical is right about 300. So if it can punch through that, then I think we're going to see it move stronger. Let's go to the weekly chart just to take a look at it. Let me take some of these things off so you can see it here. Let's see if I can do that real quick. There we go. All right, so looking at the fundamentals, it just kind of came through earnings. Their sales were up an amazing 72%. And what's even more incredible is their profits quarter over quarter were up 164%. So looking very, very good. In terms of the number of funds in it, we have 783 in it. So in terms of the funds, we know there's a lot of interest in this. It's an Israeli-based company that uses sound to do some of the things like unclog arteries and very interesting company. And I think it probably has a very, very good future. But right now, it's looking pretty good. The interesting thing about this one, 100% checklist in terms of something. And the question is, can we buy it at this level? That's always the key. So let's go to the daily chart and see how far off of the 21-day line we are. And let's see, there we go. Yeah. So we are basically 6.29% above that 21-day exponential moving average. So theoretically, we're just a tad extended. 5%, of course, is the maximum typically that we want to see for an entry, but it is still potentially actionable here. The stock is up after hours too, almost $2. So this is an interesting thing. Now here's kind of the way I look at it. If you're looking for an entry on this one, I just think that the unmute here. Okay. There we go. Okay, so I'm back in. Hopefully you can hear me now. Sometimes it has problems and I go offline. So, but Shockwave is looking good. Again, it is buyable. I wouldn't buy it above 300. That's where the ceiling is on the price. So that's the buy point. So if you're going to buy some, I would wait. Maybe it'll stabilize a little bit, but if it moves above 300, you definitely don't want to buy it too far above that. But I think this is buyable right now, and it looks very strong. And it looks like if we have a rally tomorrow, it probably will go higher. So thank you very much for that, Lisa. That looks really, really good. Another one Lisa is asking about is Nugget. This is the ETF. NUGT, that covers the gold miners, an area that I think that's really, really good. It's a 2X one. So what that means, of course, is it's a leveraged ETF. And the way that they get that 2X, the price performance either up or down, twice what is going on with the index, they get that typically by using options. So one of the things about these leveraged ETFs is that they tend to be a little bit more volatile, so you've got to be careful on them. But I do like the fact that this has come up. It's come up with a cup formation, not quite a handle, but almost a handle. It's pulled back to the 21-day line. If we're going to buy this one, we want to buy it close to the 21-day line. We definitely can do it because we're only 3% above that, 3.3%, 3.33% above the 21-day line. So this is a potentially decent entry for this. Now remember, this is an ETF, and the thing about ETFs, especially ones that are leveraged, is that they can be a little bit volatile. So be very careful with this one. You want to buy it as close to the 21-day line as possible, and that's going to give you some good action on it. Typically, though, I personally don't buy many of these ETFs. Why? Because I'm looking to see what's in the ETF, and then I try to buy the leader in that. But this is a great way to do it if you don't want to pick a particular stock, because that will allow you to basically get the performance of the entire sector, which is, by the way, the number 2 sector right now, and it's leveraged, so you're going to get some good stuff on that. So thank you so much, Lisa. That's a great question. And Sarah, is the market continuing the confirmed uptrend? No, we are still in an uptrend under pressure, even though we had a good day today. And I hope that tomorrow we're going to get a strong day. If we get a strong day tomorrow, then we're more likely to see it move to a confirmed uptrend. But right now, even though I did push into the market a little bit, and the NASDAQ was good, we are still in an uptrend under pressure. So you don't want to be any more than 50% in the market. You want to be 50% in cash, minimum, 50% of the market, maximum. So right now, we want to be careful. But if we get a strong day tomorrow, and of course, I'll be on at 5 o'clock tomorrow, hopefully we'll have a strong day on the indexes, and we will see it move higher. But right now, we are still in uptrend under pressure. So you want to keep your exposure relatively low here. I mean, that's really the thing here. You want to keep your exposure low right now, because it is at a situation where that is key, because we are in an uptrend under pressure and we're not in a confirmed uptrend. So be very careful there. All right, let's take a look at some TikTok questions. Thank you so much. Sergio, okay, sentence. Okay, Sergio, somebody like Sergio. I don't know what hello to Titanium 2020. Okay, well, so let's go over to let's go back to TikTok. This is Michael Fieldhouse. Hey, Jim. What are your thoughts on Melly? There, the Amazon of Mexico. Absolutely. As a matter of fact, I was down in Mexico City in November last year, so not too long ago. I was down there in November, and the Melly trucks were all over the place. It is one of the interesting, really success stories. It's actually based in Argentina, which is, I don't know how they do it, but somehow they do it. And, somehow they keep everything straight, because the currency exchanges and the inflation down in Argentina is unbelievable. It's even pretty high in Mexico, but I think it's 17 pesos, approximately to the dollar right now. But this company is doing very, very well. I think part of the reason is the fact that, one of the things about Latin America is that there's a tremendous underinvestment in retail, whereas in North America, of course, retail is everywhere. In Latin America, there's not as much investment in retail. So you have lots of mom and pops that are very, very small, and then you have a few big monster stores like Walmart, but there's not a lot in between. So Melly has carved out a really good niche in that area, and they are doing extremely well. Now, the thing about Melly is the price per share will kind of give you fright. I mean, it's $1,290 a share for Melly. Can you believe that? That's very high. But anyways, it's kind of like, I remember years ago trading. I didn't have any of the Berkshire Hathaway A shares. They were out of my reach, but I remember trading the B shares, and even those are high. So, this is a good stock, but it is an expensive one. It's $1,290 a share. So I don't know if I would be in this one, but it definitely has pulled back to the 50-day line, and it's up after hours. Basically a 1% move on this, of course, it's a lot. It's $12 a share. So on a 1% move. So it's pretty interesting stock. I don't own it. I have never owned it, but in terms of the checklist, if you want to be in this retail space, this retail internet space, which of course is also Amazon, it's looking pretty good. It's got a 100% checklist, and actually, it's better rated right now than Amazon. Let's take a look real kind of quickly at and compare. As a matter of fact, that's the comparison. Let's compare Melli with Amazon to kind of see what's going on in terms of that. So I'm just going to do this since the first of the year here. See if I can get that in here. And get that. There we go. There's Melli. And let's put in Amazon. AMZN, of course, is the symbol for Amazon. And actually, Melli is outperforming Amazon currently. It's kind of interesting. So let me show you the comparison here that I did. Just a real kind of a quick comparison between the two stocks. Both very strong, of course, in this internet retail area. So let's look at them both. And if we take a look at them both, you can see that since the first of the year, Amazon has underperformed Melli, but Amazon is up 30% since the first of the year. So it's doing well. Melli, on the other hand, is up an amazing almost 55% since the first of the year. This is just absolutely amazing. I also think that this has to do with the fact that because we're having so much inflation, many of the smaller retailers just can't keep up. They don't have enough cash. They don't have the resources, whereas Melli can immediately adjust their prices across the board every day, depending on what the rate of exchange is. So it's very interesting. But I do like the company. I don't own it currently, but I definitely like it. All right, let's look at PEP. This is from John Squidward. I was like hearing from you. And let's take a look at PEP. See if I can get that up here. PEP. There we go. We're moving to Pepsi right now. Let's do that. Okay. So with Pepsi, cool. And of course, this is it's funny because I was doing some online coursework today, and I took it was about branding, and I was talking about Coca-Cola. So this is kind of the companion to that. Definitely moving nice. It's got a cup formation, basically without a handle, kind of a handle. Well, I mean, you could consider that a handle. It's almost out of the buy zone though. It came above the buy point. The buy point on this one, the pivot, 184.95. So it's 194 right now. The question is, can we buy at this level? Do we want to buy this? Consumer discretionary or packaged goods tends to be pretty good. This is a very defensive area. Packaged goods typically, whenever the big boys and the hedge funds can't figure out what's going on, they buy the consumer staples. So typically in markets that are declining, consumer packaged goods tend to be one of the best areas of the market because they figure, well, even if people don't go out and do things, they're going to probably, buy some Pepsi and sit at home and watch the movies. So I guess that's what they think. So anyways, on this one, a 78 relative strength, I just can't get excited about Pepsi or Coke. I know that, Warren Buffett has made an absolute fortune on Coke. He's had it for 35 years. But it's not really my favorite. It's not really my favorite, but it did come through earnings. And the sales, believe it or not, overall were up 10% for PepsiCo, which is fairly amazing. And we also had an improvement in the overall profitability quarter over quarter as well. It was up pretty significantly The PE ratio, this is 28, which is, for a packaged goods company, I think that's a little bit, I'd like to see it a little bit lower, but still producing lots of profit. People drinking a lot of that Pepsi. The cash flow per share, $14.50, 2 cents a year. So it's pretty good. So right now with Pepsi, I would probably be, I'm on the fence. I'd rather have cash and wait for a good opportunity that wasn't in the consumer staples area. I don't really like the area all that much. Though I have to say, I mean, people have made money in stocks like Hershey's this year. Not really my favorite area. It's a very, very defensive area. So I'd probably stay in cash and wait for an opportunity in a high growth area. Now, I did buy and add to my position in Google today. Why? Because, well, quite frankly, I think Google is here to say it. I think the internet advertising model, especially using AI, is going to be a big, big deal. I think that they're going to serve up ads like nobody's business, with their new stuff. So I definitely see a very strong future for the internet advertising space. And of course, that's Meta and Google. And also the one that nobody talks about is TTD. That's the Trade Desk. So that's an area that I really, really like. All right, Mr. Joka, is Amazon a good buy? It has a high PE. Don't be afraid to buy a high PE in a stock that's growing quickly. The reason it typically has a high PE is because it's, they're looking, when you're looking at the price to earnings ratio, what you're looking at is you're looking at the future potential earnings of, you're looking at the future potential earnings of a company. So a high PE is not necessarily a bad thing, but let's look at Amazon, AMZN. And if we look at Amazon, the picture is improving for Amazon. It definitely is. It definitely is improving for Amazon in terms of where it's going. We're taking a look at the weekly chart here, and as you can see, it just came through earnings. We're in earnings season right now, so that's the part that we're talking about. Their sales quarter over quarter was up 9%, and they did return to profitability. Now, the last quarter of 2022. Amazon took some charges against their P&L. I mean, against their income. So they did show, believe it or not, a loss. So we're coming now, back this first quarter, looking pretty strong for Apple, looking pretty strong for Amazon. But here's the problem I have with Amazon in general, and this is true across all of the retail sector. The consumer is tapped out, and there just isn't a lot of room in a lot of budgets for consumer spending. Now, 70% of the economy in the United States is consumer spending, so it's a very important sector. But the lack of the availability of credit because of the rising interest rates has put a damper on a lot of sales, especially big ticket sales like cars and homes and those kind of things. So even though Amazon isn't necessarily there, I'm a little less bullish on Amazon than I am on some of the free content providers like Google and Meta and TTD. So even though it's in a different area, so do I like it? Do I like Amazon? Well, I definitely like Amazon, but if we look at the checklist on this one, not nearly as good as with Google. Let's compare both of these mega stocks and see. So what I'm going to do here is I'm going to compare Google with Amazon and to see kind of what's going on there. So Google and Amazon, and they're pretty similar. I mean, Amazon actually year after year has slightly outperformed Google, but I definitely think that we're going to see that they're going to change position somewhat going forward. So let's take a look at Amazon definitely is since the first year is outperforming. That's interesting because I wouldn't have said that, and I'm typically pretty right about it. We typically know that pretty well. But let's take a look at the comparison of Amazon versus Google for the first about half of the year. And if we look at the comparison chart here, we can definitely see that Amazon is slightly better. It's up almost 30% since the first year, which is kind of amazing. It was so beaten down. Matter of fact, all of the NASDAQ stocks have been very beaten down. So that's part of the reason that the performance has been quite good. Google up about 28% since the first of the year. So I definitely put money in Google. So we could probably look at Amazon or Google. I think they're both super stocks. But one of the things about Google, at least from my perspective, is right now it's a little bit higher rated than Amazon. As you can see with Google, with Amazon, we have about a checklist of about 56%. The checklist on Amazon is about 56%. But if we jump on over to Google, you can see it's a little bit, it's a little bit better at 60%. So it's a little bit better. Yeah, it's a little bit better, but not much. But not much. So very, very similar. I prefer Google, but Amazon's looking pretty good. So you definitely could start a position in Amazon. Let's see. I want to see how close to the 21-day line it is, just to see kind of if there's a good entry point for Amazon here. Let's take a look on the technicals. Yeah, we could definitely do that. It's a 5.3% above that 21-day line. So that is good. And it has moved above the 200-day moving average. So that's very, very, that's very good. It's been below the 200-day line for a long time. Yeah, really for a long time. And there's one thing I want to check on just really quickly before I kind of give you my opinion on it. And the one I want to look at is what they call overhead supply. And this little line here is the overhead supply line. Basically what it is that because it's come down so much, there's quite a bit of overhead supply on both of these stocks, but it's particularly on Amazon. As you can see, many people bought it way up here at about 180, and then they have been holding, and it went down, and then now as it's coming back up, they're looking to sell. So this is something that you've got to be careful with a company that has corrected strongly, and definitely Amazon is one in that category. So there is a fair amount of overhead supply in there. So I would be careful buying here. I'm just a little bit afraid of it, but still, it's looking good. So you definitely could start a position. I wouldn't do a large position in it though. I just wouldn't do that right now. Hey, Alex, Charles. Microsoft is getting into the electric producing business with Helios Energy. Thoughts? It's really interesting. You're seeing all these mega cap tech companies looking for, what they're doing is they're desperately searching around, and they know that the consumer market is going to be lower, and because we are moving into probably a recessionary period. So they're looking to continue that revenue growth, and they're looking everywhere. Apple, of course, has the savings account with Goldman Sachs. I mean, that's why they're offering the savings account, because they know they're not going to get the growth in the sale of products and maybe not even services. So not the kind of growth they've been having. So they're now in the banking business. And I guess Microsoft wants to get into the energy business. Go figure. But I'm not surprised. I'm not surprised that it's solved. The reason that these companies are doing it is they don't want to do stock buybacks on the one hand, but they're looking for areas where they can find growth, and that's what they're doing. They're looking to where the consumer spend is, and of course, it's in energy, so that's not a bad place. But I don't like the fact, frankly, that they're not more pure play. I'm a little bit concerned about that, but I know exactly why they're doing it, because they need the growth. They're looking out, and they're not seeing the growth in their core business, so they're going after other areas. So, again. The Microsoft is sitting on a pile of cash that it doesn't really know how to deploy, and that's a very interesting thing. So you would think that they would do stock buybacks, but that's been not as big in the last year or so. But that's the thing. That's why they're going into the business. They just don't see the money. They don't see the opportunity as much as they did in their core business. So let's look at ExxonMobil. Now, I did sell my position in ExxonMobil. It's been a little bit rough on it, not a whole lot. You know, I do like the company. It has a super low price to earnings ratio. It's about 8 or 7, depending on what the price is. It's very, very good stock, of course. Let's take a look at it just over the last little bit here. They came up with earnings, and their overall sales were down just 4%. But interestingly enough, their profits were up. So you can't really fault them there. I think their execution is, it's really second to none in terms of the oil companies. Maybe Chevron. An incredibly low price to earnings ratio. The price to earnings ratio on Exxon is 7, which is absolutely incredible when you think about it. Absolutely incredible considering this is like a 130-year-old company. So the question is really, what, let's see, it's for joking. How close are we to the recession? I think we're right around the corner from a recession. Why? Because, we're seeing some of the consumer staples. We're seeing a lot of action in the consumer staples area of the market. That tells you that that tells me, anyways, that the stock market is running out of ideas to find growth. So they're hiding in the consumer discretionary area. So that shows me there. Also, there's not as much. There's been such a sell-off in the tech area that a lot of those stocks are bottoming. But I definitely think we're very close to a recession. I think that there's going to be problems with the mainstream banks, and I also think that Apple and companies like that are going to come in and take their deposits because they're willing to pay 4.15%, which is amazing, on their Apple Pay, their Apple Card. And of course, Goldman Sachs is going to run it for them, but that's absolutely amazing. So when I think of it, all right, let's take the last one, and that was going to be oil. Oh, can you please look at? Let's take a look for people here. Thank you very much for typing in for the coming in on TikTok here. Of course, by the way, if you want to see the whole charts and everything, I can only show you a portion of them because I have to take a picture of my screen. But if you want to see everything, super easy. Just jump on over to www.Dallas Trading Floor, and that's on YouTube, and you can see everything along with that. So let's take a look. Can you please look at PRCH? Look at that, PRCH. And take a look there really quick. And that is Porch Group. And I don't know a lot about this one. I'll be honest with you. Software, okay. It's in the software sector, which has always been a good sector. But right now, this is the thing, it has been sort of disinvested in a little bit. So let's jump on over to this stock and see kind of what's going on here. Right off the bat, if we look at the weekly chart, you'll notice that the action on this stock has been steadily downward. It was back in December of 21. This was a $20 stock, and now it's worth 93 cents. So here's the thing about buying stocks under $1 a share. They're very much in danger of being delisted. You can lose all your money. So I'd be extremely careful on this. Remember that it does happen. I mean, we do see stocks get delisted all the time. I believe that Open Door and Carvana. I think Carvana is potentially like that. So this is just not something that you would want to touch. I mean, yes, their sales were up, but it's still losing money. So I can't get behind this one at all. I mean, I don't think I would want this to. I don't even think I'd want to short this one. Just overall, not a great thing. Let's take a look at Carvana. CARV, I think is what it is. It's Carvana. No, it's CARV. Anyways, I can't remember with Carvana. But anyways, one of the things you got to be super careful with here is when you are looking at stocks that are this cheap, they have a way of going out of business. So be very, very careful. I don't recommend it, and not something that you want to get into. All right, let's take a look at GRBK. Let's look at that one real quick. GRBK. And see there. Okay. Carver Bancorp. Interesting. Okay. A holding company for Federal Savings Bank. This is one of the banking stocks. Wow. I don't know. Is that right? Did I get that right? I don't think I did. GRBK. Excuse me. That was wrong. I was looking at this. Wow. Green Brick Partners. Very interesting company based here, actually, in Dallas. No, Plano, Texas. Okay, well, that's a suburb of Dallas, so kind of the same thing. It's funny. Some of these home builders are doing really well, and I can't figure out why, but it's definitely up after hours. They had some pretty good earnings, I believe, coming in. Let's look at the chart. Yeah, look at that. Wow, look at that. 99 relative strength. Absolutely amazing. This building, residential commercial, number 2 out of 199. So very strong area of the market. And, I don't know. It's just for some reason, they're doing very, very good. They've got a price to earnings ratio of 8. Cash flow is good. So, people seem to like this one. I want to look at this, the checklist. Yeah, 78%. So that's pretty good. Wow. I think this, this one should have been on my radar. Let's take a look to see how far off that 21-day line it is. And let's take a look. All right. Yeah, it's really extended 26% above the 21-day line. So even though this has moved up very, very nicely, I think you got to just pack it in. I don't think you could buy it at this level. I think it's likely to move lower. So good stock, but not a good place to buy it. All right, everybody, thank you so very much. By the way, if you're interested in that Apple Card, let me just put the address up here again. The link to that, and this is for the Apple Card. They are saying, and I'm not getting remunerated anything on this one, but the link to the Apple Card is apple.com/apple-card, and this is the 4.15% savings account that is going to be administered by Goldman Sachs. And very interesting in terms of very interesting development. And of course, it's going to work with the Apple Wallet. I don't know if you use iOS, but if you do, it's all integrated. So very interesting thing there as well. So that's something that you might want to take a look at if you're looking to place some money. And frankly, with some of these regional banks, I think you might be in a good way to do that because we haven't seen the last of bank defaults. We're going to see some more regional banks go down, unfortunately, because they have liquidity issues. And I don't think that that's the case with Apple here. All right. Well, thank you very much. Please like the show. I appreciate what you do. So smash the like button. That really helps us out. We try to be here every day at 5. Sometimes I'm not, but most of the time I am. So smash the like button. It really, really helps us out. Also, if you want to get on the free action trading alerts, super easy to do. I haven't really sent out anything in the last week or two, but I'm going to probably do some stuff, put some stuff out. Easy to get on that list. Just go to www.Dallas Trading Floor and get on the list. And of course, it's all free. And you can unsubscribe anytime you like. All right. Until tomorrow, everybody, happy trading.